Where are we? Alrighty, here we go. Payrolls. I'm waiting for Eric to turn up. Hopefully he's going to be here soon, unless he's forgotten, like many people, that the clocks have changed and actually payrolls is 12:30 and not 1:30. So we'll see when Eric turns up. He will be here soon, I'm sure. Right, it is payrolls. It's a trickier one, I think, this month. The reason I say that is because of the other things that are going on, i.e., we have the first day of the month. You've got ISM later on as well. And you've then got US elections and the Fed next week. So if this was taken on its own, I think it would be a really, really solid precursor for what the Fed is going to be or do. In light of all the rest of the things going on, I don't think it is so much. You've also got the fact of the floods or the hurricane, the destruction there, that is going to play into this. So that's why the expectation is much, much lower, with a headline around about 100. Looked at estimates running from about 70 to 130. The difficulty that you have with one like this is whatever the number, it can always be passed off as, well, this was a symptom of miscounting because of the hurricane or because of this and that and all the rest of it. So I think it runs the risk of being sort of received differently and with less conviction and belief in the actual number itself. That said, it's still going to be a pretty important number, as it always is. So I'm still looking for most people probably leaning towards ZT, because this that's 2-year, giving you the chance to play the Fed move on it, if you will, particularly on a much lower number. If this comes out negative, it will be very interesting to see if bonds can reverse some of this very, very heavy selling that we've seen in recent weeks. So that's probably going to be the bigger surprise. A higher number, I think, maybe somewhat more muted in reaction. Because I don't think it really changes the expected outlook from the Fed on this one. Other thing to keep your eyes on is revisions, or are revisions. Remember, it was 254 last time. Any possibility of that getting changed, you have to then look at the net change rather than just the revision, if you will. So let's say the number let's say the number rises by 50, but the previous is revised down by 50. Ultimately, the net change is nothing. So just bear that in mind. I think a lot of folks will go on to the revisions as they come out. Similar view to you, Eric?
Yeah, I don't know. I have a feeling, and from what the guys say, yes, they're very prudent, obviously, on reading the data. But I still think there might be some opportunities that are not necessarily NFP related, but more like context related. So again, don't forget, we had the month end, I call it like that, but month end or earnings, but it came before a month end sell-off yesterday on equities. And for me, it opens up to, again, kind of a technical structure for possible opportunities. So we had also the sell-off, what they call a kind of almost Trump trade. You know, the treasury is being very heavy. So it's almost like if the market move, I don't think it necessarily need much of an explanation of the why this weak number or strong number trigger that kind of momentum. I think the momentum basically can build itself, if it makes sense. So that's my first idea. Is really to rely on again the context, the key levels 3 days before a big election. Again, first day of the month, yesterday, last trading month, and this is why I figure, like, for example, if I just open up very briefly a chart just to show you that. So if we work on the S&P, I did say just now on the market analysis, but you see this type of structure when actually I was debating now with the total. Look, we just landed. This week we just landed at 57.30, which was, you see, a key structure. Okay, so we are here. So yes, that was a heavy week. I can't say the opposite way. We dropped 150 points straight line. There is still maybe one more leg lower if we break down. Okay, fair enough. But I also think that as soon as if we start to get, you see, you got pivot point, you have your previous highs here yesterday on the close. This is a type of almost like cave type of a possible short squeeze opportunity. And I've been in this situation when, again, if you think about the data that will trigger that, you're thinking, what do we do? Like a big miss or a strong miss? Is it a big miss? Recession? So I think this is where I rely only on technical, price action, order flow, and we'll see if it does it or not. Obviously, there is a lot of unknown, but I just think well, I've been in this situation. Now I'm not going to kind of justify why the market is moving like that. I think there might be other technical reason for that. And same thing for the treasuries. We saw the big drop in treasuries. So there's going to be a question about how much this NFP data change what the market has been building over, for treasuries these weeks. Maybe for equities is only the last 72 hours. But it's almost, it could be for me the triggering factor to get some maybe nice possible momentum, but not necessarily again like debating too much about why is almost like Fed related. So this is the way I see it, and I've got a couple of traders who see it that way. They just tell me, but honestly, I think only 4.0, sorry, plus 150 for me to have some conviction. But even then, I'm worried people will use it to position for election, you see. So going to rely on steers and what they are telling me in terms of monetary policy. So voilà, that's just one trader's view. And yeah, so that's for me the view. So this is why voilà, I can't ignore the context, and we do not ignore the context. There is still some, maybe one more leg on the trader that sent me a weekly chart of the 10-year. He's a very technical trader, and it looks like we have a channel actually, and we might need one more a drop. And I watch on my 10-year, and I think it kind of coincides with this low. I think it was down here around 109.05. That will be your kind of a possible target in 10 years. Again, this is a channel that is in a weekly chart, so very much like different. But yeah, it shows some, again, maybe still a bit of room to the downside. So. And gold also has structured a couple of key level. I think it's 50-50 in terms of where they can go. Again, the idea is to check if they break first any key level. So that's for me it. I will just now jump on the ladder. And
so you've only got a minute to go. Don't know where they've gone. Well, hopefully we'll get some ladders up.
People following us have already all the ladders up, I'm sure. All right, so already the treasuries are on the lows.
There we go. Right, standard format with ladders. As always, you've got the 30-year on the left, followed by the 30, 10, 5, 2, S&P, NASDAQ, gold, euro, and then we've got ZQ, Fed Fund Futures. Keep your eyes on, I think, probably more the DEC one for how that moves. Basically implying whether we think there are going to be significantly more rate cuts or not. At the moment, it's very much looking for one cut next week, or 25 basis points next week. Right, here we go, 10 seconds. There we go, 12, really, really low number, 12 there, and
is it going to be a move up?
The earnings 0.4.
And a reversal because of the fact that, it's maybe hurricane related only? This is a big question.
Interesting how slow people were onto that. And most short now, most trying to play fade.
Yeah, they play the fade because of probably the disruption on the data.
Yeah, I think, you could push that off on the, it's impacted by the hurricane. But I don't know, you have to ask the question, like the really bad number, is that not a greater impact? As in, a bad number is going to have a bigger impact than a good number, I felt on this one. We shall see.
Yeah, I'm just checking now. It's still very much, they're looking to fade. Some traders are looking to fade. Yeah. It's always a bit of a dangerous one, especially when you're just after the data.
And the S&P's done it. The S&P's faded it back pretty swift. Well, super swift on it.
Yeah, we did.
Actually, you look at the S&P, and the S&P just really not reacted at all.
No, it's 65. It's just like 65. We're actually 61. 4 ticks higher, 10 ticks lower.
That does kind of echo my point at the beginning that I'm not sure people are overly fussed on trading this.
No. Equities is not, again, in terms of, there is no return equity.
I think more on the whole thing. I'm not sure that people feel that payrolls is that significant in light of all of the other things that are out at the moment.
Yeah, I agree with you.
Out.
I think it's why I think it was more technical, and in case we come back to the 70s.
Bear in mind, revisions were lower. Sorry to interrupt. Revisions were lower by 30,000, so the net drop is actually negative. If you take 30,000 revision lower off the 12.
I'm just looking, S&P is slowly drifting higher. I still have, in my opinion, 70s. We saw also a large offer of 360 lots. And then there is another one at 72.25. So this is a two level also. One was pivot point, one was yesterday highs. Again, like the last trading of the month. So in theory, there are still key level to watch. Just keep an eye in case they kind of get back up there. Gold 69. I think we had 72 as a possible. So yeah, S&P is now like kind of. Again, I don't think you have to extrapolate too much on the kind of recession fear or rate cut or so on. For me, it's much more technical, and we start to see a bit more of the upside actually. And all asset class, I've built a type of actually initial bull, pullback, and now back to the high. So now, I say it's not so easy to fade straight away. Because you might
I keep your eyes on the 2-year at 103.04, not just because of that 1200 lot, but because that's previous lows from the initial drop on CPI
already. Oh, yeah.
And it was the pullback on Wednesday, before you had this it pulled back there and then we went down. So I think that's going to be the sort of key point. If 2 years get over that, you've got to really question whether it's still that much of a fade.
Right. Now Euro also was already in a sense like has done a consolidation phase and now the idea is maybe can you get a leg higher. I think I had 55 as a possible target to the upside. I'm just checking if I can draw some kind of possible kind of retracement level, just to get a feel of a similarity or not over the structure. Just in terms of position.
Not been a vintage performance, has it? It's very much everyone who's tried to fade it is not faring particularly well at the moment.
No, definitely not.
I think that, interestingly, for all the look towards bonds going into it, the people who've done the best out of it have predominantly traded S&P, despite the fact it's in a 10-handle range.
I will be honest, I haven't seen clear like a reversal. I can see the market is not willing to, is a bit on the to kind of, for me, you can call it noise or consolidation, but I'm watching now the 5 years and 10 years, and yeah, it seems to be hesitation to really get a new leg higher. Does not really reverse. Very much trading within a range now. Obviously, if you sequence, this is how it looks. Again, this kind of pullback lows are very important. So it's going to be 107.10 on the 107.101. There's a large offer at 16 actually just now on the ZF. There seems to be looking actually for the upside. If you are to fade, I think at some point here it's, I don't know. I would have some doubt. I would prefer. Again, it's just me, but I would prefer if I had to play. I'm just looking at if we can get like a sense of the first FIBO here. Yeah, I would prefer for the market to kind of really re-challenge the pullback lows, to say, look, guys, you buy the highs. That was wrong, because in the mentality of the reversal, especially when it's like that post data, it has to be done in the first like seconds after the data. Like anyone who is late to react is gonna have to pay the price. Whereas if we start to stay like we're doing now, very much close to the highs, this is where actually, obviously, this is the opposite mentality. Anyone fading it is pushed out. So we're probably gonna see actually.
Just a quick note on the S&P for people looking at it. We just traded 69s. 70, 71 was the high of any pullbacks yesterday after that initial sort of liquidation. I think the S&P technically has been really nice of late. So if you're looking for an area that you're expecting some reaction, it would seem reasonably sensible to 70 to 75.
Yeah, yesterday, if you look back, this is...
that's going to tell you a lot about the S&P's willingness to actually go higher or not on the back of all of this.
Yeah, that was
on the back of all of this.
7 p.m. highs, 4 p.m. highs, 3 p.m. So yeah, that was definitely the first area to look for. Again, there is pivot points. Also, again, you come back here, so you invalidate the double top pattern, in my opinion. So for now, they stop here. Still, for me, a key level to watch, especially as we are heading to the open. But kind of makes sense. I'm surprised almost like the market did not even get there on the data, but again, we explained that I guess NFP equities are less. We are not in an NFP when we had, do you remember, like $40 like, straight away.
Even if you compare it to last month, the S&P went a pretty hefty distance.
Yeah.
Certainly with the grind into the open, and you look at the bonds last month, they really went for it. on that notably higher number. What's I know you're sort of making the point that it's not necessarily all that Fed related, but what is quite significant is the 210 curve steepening.
Yeah,
that you've seen is steepened by. Well, now you're looking at 8 basis points. I know that doesn't sound loads, but 8 basis points of steepening on the back of this number suggests that people do think that this could initiate, or it sort of brings back the question of rate cuts, if you will, or well, not rate cuts, but how many and how big.
Yeah. No, but that's good because maybe I was probably wrong to underestimate the importance of this. And
well, I think most people underestimated the importance of it. I think that's the main reason people have faded it.
Yeah. Now again, I think we are. This is an interesting case because obviously we are all here to learn is how much you prep for a scenario, okay, and you go for it. And I use the word because I did a couple of weeks ago when I was in London. The Draghi, we can call it like the Draghi trades. So no matter what, whatever it takes. Sorry. So kind of takes the trade whatever it takes. So it's just like you have a strong base about how the market can react, or again, you wait, you have a scenario, but you still rely on market reaction. Okay, and for me, this is where you can have different approach. You can again either you had a strong I will fade no matter what, and in that case, your hedge is again to be quick. Like as soon as you saw the market going on the top, you were short around the highs, and as you give a chance, market come back, you go out. Okay, that would be one possible way to do it. Either you're thinking I think they might fade, but I will wait to see if the market no, actually you really the hedge of the Fed is to be fast. So if you wait, you might not have a much of it in that example. Or you actually or the opposite. You're thinking what maybe they've done. Like you wait for the fade trap for the fade trap, and here you actually join some buyers, but.
Talk yourself out of that one.
Yeah, I'm struggling, but it's. I just think because some traders I know they're gonna do it almost like no matter what. They have a clear. This is, and I still think it kind of makes sense if it's still a structure. Like I said, you're gonna fade it, and you almost like don't wait for confirmation because again, your hedge is to say I'm doing it. So for me, it kind of makes sense. Whereas some will say how can you fade a move, if the initial reaction is like that, better to wait, But the risk of obviously waiting is that you might be short.
This year and it flashes and flashes back and you've missed it. It's the difference between what I call a reaction fade and a technical fade.
Exactly.
The reaction fade is just get in, but you should go straight on side. Technical fade, it needs to actually fail up here. If you're looking at something like, 5 year, until it gets below 0.7, 15.5, it's not really a fade, is it? It's just a pullback in another leg up.
Thanks for clarity. I needed that. Exactly. Technical fade against. What did you call it?
Gold's probably at that point now. If you look at gold, 27.65.5. Yeah, this would be what I would call your kind of technical fade. If it's gonna stay below 65.5, then it runs the possibility of the full fade.
Yeah, exactly. Especially when you try twice. You see, we've been testing 3 times actually this level. So it's only 10 seconds, but again, since the figure has come up, we haven't been traded below that. So yeah, it's a beginning of a. It seems to be also the weaker one. We always try to compare, but if we compare, I haven't done my Fibo on that one, so I'm going to do it now. But if we do use, I use just the data beforehand. But let's say. Even if we take the first high and the first Fibo, you see it's already like, breaking down the pullback. Whereas you see the euro, I will be your equivalent of 109.00. Okay, on the euro, I will be the equivalent of 107.10 on the 5 years. So overall, I would say if there is one that seems to be let's say the less strong is probably gold. We knew 72. I had 72. It did stop at 70, but we knew that was from the sell-off of yesterday. Obviously, we can't ignore where I come from yesterday. We dropped 500 ticks. I think we were to 94. We went to 43. So 500 ticks down. So we just came back to 70, and maybe Y is a bit of a, let's say again, less strong. Technically, the treasuries, in my opinion, start to maybe look not really, but look bullish. basically, again, in terms of sequence, you have your highs done, retest it, could not break, a bit of cup and handle. That's definitely a cup and handle, by the way. It's only 10 seconds, so I'm not going to go crazy, but voilà, break, leg higher, retest, leave one tick, and I'm frustrating. I've been there. One tick, above these highs here of the handle or even the initial highs. So voilà, you kind of leave anyone a bit, in a sense, almost too protective or to look to buy the optimal price, not get filled, and now we are back to the high. So voilà, if I have to rely on the last 15-minute structure, if I didn't know there was the election, if I didn't know, I think if I didn't know the overall trend, I would think this structure right now looks in some way bullish. I'm just looking now. Alors the ZN did give you the chance to get filled actually on the initial highs. So, and ZT, which is down here, this really was
back below the A4. You're seeing the sort of marginal flattening with the long end catching up now. Pretty minimal.
Bund, I remember I had 13 actually. It was a good
Sorry?
level. No, on the Bund, I'm just looking at the Bund because I remember now I had a 12 or 13. I think that was a pullback highs.
Yeah, I thought 14 previous value area high.
Yeah,
14, 21 for me.
Exactly, 14 was a
Bund. Incidentally, nobody traded the Bund on it.
No. It was just because my eyes came to the Bund, and let me just check. Oh
yeah, it's often a favorite, isn't it?
So in terms of performance, definitely not great, as you know why.
Yeah, anyone who faded it seems predominantly still to be in on the same trades at the moment.
Yeah, which again, I'm not a huge fan, but obviously anyone does is and maybe if the market drop and straight back to the lows, I will say okay. But as of now, again, watching at the structure, I don't know if you can feel it or see it in the screens, but yeah, it's at least. And now also we have the initial highs, and that seems to be the one to watch. And you see, so very much a level of interest if you think that the market may actually again has done the highs and come back inside the structure. You see in terms of volume, obviously on the digital reaction, we haven't done much volume. So there is still this structure to look for. I'm not going to lie. Now to say, as of now, where the market is trading, for sure we're going to do an inside day, back. I personally think it's a bit too early, but it's never a recommendation, obviously. But you can maybe look at gold, but again, I don't think gold is anywhere right now in correlation with other. Euro is just back to the initial reaction highs. Equity 69.5 is your highs. I'm thinking of, because also of Apple earnings, Amazon earnings, Intel earnings, and overall the big tech week earnings, how much the market is actually now focusing on the cash open inequities and the flow that is going to bring rather than really the structure we have now. With all honesty, there's so much billion in terms of involvement on equities and on earnings, on buybacks and on
I think what's also worth what was I going to say? No, I forgot what I was going to say.
So I just so equities. I still have. We reach a key pullback level, to be honest. In terms of what we showed yesterday, last night, that was 70 as a key level.
Yeah. So I think that makes the S&P interesting. Oh, that was my other point. Last time, I don't think you've got the same on this one, but and it's been quite common of late with the payrolls in the S&P that it fades on the cash. So whatever the direction into the cash, you've seen it quite often going the other way. Obviously, it's a hard one to fade when there's been absolutely zero direction.
Yeah.
So I don't mean that's quite so applicable today, but I think you then go back to looking at yesterday and look at where we've moved, and 70 is a pretty significant level. So for me, my sort of thoughts would be around that 70 area and the ability come cash, whether we can actually stay below that.
Okay, interesting.
I was looking at that, you've got this zone.
Yeah. Don't get me wrong, I think that risk reward, you are pretty close to a key level. So I guess your risk is maybe tight, I'm just thinking like 70 down to 25. You've got a load of bad lows at 25.
that we didn't quite reach yesterday, more because of the fact that we ran out of time to get there. And that just makes you start wondering whether, there's that scope for the S&P to then go for it as long as it's below 70. The size of the move yesterday doesn't exactly lean towards massive direction today anyway.
No, I think it's for me, my interpretation of this chart was just that, again, we left some as much as it was aggressive drop, the fact that we stopped here might have been just, again, related to seasonal factor and earnings season and macro and month end and so on. And I just wonder what, again, for me, I'm more like leaning to this type of possible pullback up. But again, I think the 70 are going to give us, and hopefully should give us on the cash a good information.
Well, I think that's your line, isn't it?
I think it's just the level. Now, whether you're looking for the open drive up, an aggressive buying momentum, or again you're looking for the market to reject and you're short and you have a tight risk, and because you don't want to miss a big flush down, straight from the open. I think both make sense. For me, it's just like right now, it's just like we draw a level, we draw a possible scenario. What's left is just how the market is gonna trade around your key level.
Indeed.
But I do like also this 50, 57, 70.
I think probably from that we could take that if someone said to me and you have to take a position on the open, I reckon they'd be opposite.
Yeah. I mean, yeah. If I had to be long, let's say I anticipate, because we haven't broke 70, but I'm thinking, what is going to be an open breakup cash open. Again, kind of my mentality will be to say, look, short squeeze type, month end reversal play. I remember back in the days in Marex, some guys came in and it was coming from fund, and he said, it was just obviously it's an anecdote, and it was about 10 years ago, so don't get me wrong, maybe his structure doesn't work anymore, but he was just saying, if there is like an aggressive last trading day of the month sell-off, like you buy it straight away the next morning. He was talking about European equities at the time.
We used to do that as a trade all the time.
Yeah, so
sell month end, buy first of the month.
Yeah, because again, for me, the idea is just to say how much the what's driven the sell-off yesterday, and yes, we had some micro processor, that were a bit that were down. We had also some kind of Estée Lauder, I think was down 15%. So we still had some earnings that was a bit of a shocker. Don't get me wrong, but I think also there was some momentum down to the last trading day of the month, and since also we had Apple, Amazon, so. For me, there's always a question about how almost genuine the sell-off was yesterday, and how or not easily someone can the market retraces back. So again, in terms of being long, while we are still 35 minutes away from the open, but if I had to anticipate using now the structure post, if I know it's pretty large, but in reality, if you accept some noise straight from the open, I would think 60, 62, you see, is a kind of level you may use to say, look, I'm long, I anticipate. My hedge is to be on position before it. It's not something I recommend, obviously, but it's one of the possible way to approach the upside. But my stop will be around 62. Or again, you have a very tight stop and you wait, which we're not going to do, but 35 minutes and just 3 or 4 minutes before the data, you define a level of a stop. And again, because it's in and out, right or wrong, quickly. Okay, it's not like you start to debate. It's just like. You can do that, or you wait for the break to really happen, and then you kind of position. Either you chase, can be also case, or when I say chase, you buy at market above the 70s, or you wait for a pullback. But that would be my strategy for a long approach ahead of this key level, which we've been struggling. And there is a larger order at 70s, 360 lots. I don't know if it kind of.
That's been there all the time.
I know, and I wonder if it's just why some guys are just some offers, let's say, are almost like front running and keep doing 3 or 4 ticks each time we get there. Sometimes there is this type of structures, again, same mentality. You put a stop just above and you keep selling 3 ticks. Well, this is more scalping strategy, but I'm sure Richard will know what I mean. But yeah, you keep selling 1 or 2, just here 70, 25, and you go out at 58, 65, and so on and so on. But so treasuries are, and now I think again we can say it, are still, and it's not massive, it's not really powerful, but the structure is again pretty much, and it can kind of create this type of very irritating because it's very hard to join on the buy side because it does not really pull back, but selling is very painful also. So I don't know.
Yeah, the classic smoking chimney.
Yeah, it's kind of you want to go away with it, but it's just like it keeps. So voilà, keep an eye on that. I think we have the initial again highs as a couple of. We have a couple of good support. We see if the flow really start to change. It doesn't seem to be the case as of now. And again, we saw the gold being the weakest one, and again, now creating the 70 as a key resistance, in my opinion. And what are you doing, Euro? Yeah, Euro struggling also to really, because on such a weak number, you felt like the Euro could have gone a bit better, but actually it's just like not finding anybody else. So dollar is still very strong. Again, I'm wondering if it's something that's going to be unwind or not over the elections. There's going to be a lot of obviously opportunities over the election. Again, it's a bit like today, not necessarily I'm thinking about the election obviously result, of course, but also what happened over the last 3 weeks, you know. And I know some traders are already telling me like, oh, I think it might be unwind. So and I've almost now it's done, election is done. Let's get back to some so because the dollar has been really pretty strong, as much as treasuries have been pretty weak.
Yeah.
So
well, I think most people seem pretty out of positions now, so I think you probably reasonably say that most of the payrolls trading's over, and it's more sort of technical plays now that people are interested in. So I think we've kind of got past the main payrolls action now. It's been pretty solid reaction. I think it's just like you said, people's prep had guided them one way, and the result did not pan out like that, and you're kind of on a smoking chimney on the treasuries now.
I think it was the case. I think the trader again had doubt about any weak number being actually is the impact of the hurricane, and so they missed wanted to fade it.
There we go. Right.
PM. So
do we call it there? And
I think we should. I think guys, we have 30 minutes left to reassess the charts, and not such a big deal in terms of structure, but I think again most of it may be done over the next 2 or 3 hours. You know, Friday afternoons, again, Thursday of the month, and so on, and might still be some good opportunity.
Indeed. Right, until the Fed.
Ciao, bye everyone.
Yeah.
Speak to you next week. Ciao. Good weekend, guys. Bye.